As the global insurance industry continues to deal with economic fallout from the coronavirus, AM Best has changed its outlook for Canada's life annuity sector to negative. I'm John Weber for AM Best TV. Here to discuss the rationale behind that decision is senior financial analyst Anthony McSweeney. So, Anthony, why did AM Best change its outlook for Canada's life annuity sector?
Yeah, John, the change was primarily driven by the global economic conditions that exist today. Obviously, these are unprecedented times. We're seeing impacts to equity markets globally. We're seeing impacts to interest rates globally. We're seeing impacts to local economies globally. We're seeing stresses in healthcare systems. And particularly for life insurers, they are exposed to one degree or another as a result of these different stresses that we're experiencing right now.
So what would you say are the top concerns or areas of specific importance you'll be focusing on during this crisis?
So I think the first order of impact, we're concerned about the operating performance of insurers. If you look at, let's say, just take the equity market, for example, the drastic movement for the first quarter of the year will have an impact on the market values of the assets on the asset side of the balance sheet for insurers. And those things run directly through the P&L. So the first order of impact is going to be a P&L impact related to the diminution in the equity value of the market. Also, insurance companies are impacted through their P&L by changes in the interest rates that run through their P&L. So these are the first order impacts that immediately hit the operating performance for insurance companies.
Anthony, do you think Canadian life insurers are prepared for this type of crisis from a ratings perspective?
Yeah, John, I think from a ratings perspective, based off our initial consultation with insurers and some stress testing that are done on behalf of insurers and our own internal stress testing, we do have anecdotal evidence that the insurers are, generally speaking, prepared. More so on the balance sheet side, at least in this initial first order impact, less so on the operating performance side. However, Canadian insurers do have robust operating profiles across the board. They're all highly rated companies. So they do exhibit strong financial metrics that does help them buffer themselves against this impact, at least initially.
Now, is this outlook change viewed as a long-term systemic outlook change for the Canadian marketplace?
Well, John, that really depends. So we just talked about the first order impact hitting the operating performance side of insurers, and that's kind of the first wave. The second wave, which has lagged, will impact things like credit defaults. So insurers that have asset impairments that will eventually run through the balance sheet and also the P&L. Those things I call second order impacts. They're delayed, they're lagged, they happen later on. If this is a V-shaped recovery, as we all hope that it is, it's likely that this will not be a long-term view, an outlook change. However, if we are in more of a U-shaped recovery and the low end of this extends for a longer period of time, the credit and liquidity issues are going to build over the next several months and will start to have a lagged impact to the insurers. So it's really yet to be determined. We all want to be optimistic, but it's too early to tell whether it's going to be a long-term or short-term view.
Thanks, Anthony.
Thank you, John.
That was senior financial analyst Anthony McSweeney. You can find the full Canadian market segment outlook online at ambest.com. For AM Best TV, I'm John Weber.